Hey guys, good morning. So I just wanna I just wanna drop this quick tutorial, like call it tutorial or lesson on a strategy called ICC. Right? So ICC first was introduced by a guy named Sai. I think he deserves his flowers because he did a very good work finding out the strategy. All right, so but I'm going to use um another term for the ICC, right? And I'm going to use another term for the ICC, uh, and we're going to get right into it so that I show you how this thing works. Okay, so I means indication, right? Which is the same as your break of structure for people that trade supply and demand, break of structure. Then we have a C, correction, which is the same as your retracement. Then we have another C, continuation, which is the same as continuation, of course. So, how does this strategy work, right? You have your indication, which is your break of structure, and you have your correction, and then you have your continuation. The first thing, the most important thing in this strategy is structure, right? A structure because all these falls under structure, but the indication, the correction, and the continuation. So it all falls under structure, right? So while you're facing the structure, you have your indication, your correction, and your continuation. Make it simple. What is structure? Structures are trends of the market, and we know that there are three structures the market gives to us. The first one being consolidation. So this is when the market is going sideways. Sorry, I'm just going to so consolidation. Sorry, consolidation. This is when the market is going sideways, and in this area or this time, we are not expected to get into any trade because during this time we have what they call equilibrium, right? When the buyers and the sellers are satisfied with what the price is doing, okay? And it's called the consolidation phase. Then we have the uptrend. This is when price is going in in an uptrend, right? And then we have the downtrend when price is going downwards. So these are just the three phases of the market. And you do not trade during this phase, the consolidation. You trade either the uptrend or the downtrend. You keep it simple. So here is a no trade zone. That's what Sai calls it, anyways. A no trade zone where you have to wait. Okay. So the good thing about this strategy is that it has a win rate of about 90% and it eliminates a lot of fake out. Okay, and we all know that most times we get fake out because of we lose a trade because of fake out, right? For example, if I was trading, I come from SMC background, right? If I was trading this, and we know that Okay, let me just take it back a bit. And we know that um we know that we have another block here. We have imbalance resting here. We have liquidity that has been taken here. I'm definitely putting in for a sell up to the high, at least, maybe. And we find out that let's play price forward. First, it takes you out, right? And you're like, oh, maybe if I had used the confirmation, I won't be taken out, right? And then you see this standard confirmation model where lower, lower, high, lower, low, and a higher high, right? And you're like, okay, once price comes back to this other block, I'm going to take it a buy back. So once price comes back here, let's just say you're just trading from an open public point of view, and then you get taken out again, right? So these are the kind of things that this strategy takes you, protects you from, right? And it happens that I have been back testing it to try and make people understand it better, make you people understand it better too. So what do we do? In this strategy, let's say you have an uptrend, right? And this happens in the market. This on the SMC world or ICT world, we're going to call this a break of structure, right? And you can draw an arrow, a short trend line to indicate it's a break of structure. While in ICC, we call this an indication because price has indicated that it's going upward. Same thing as a break of structure, actually, right? Because this is indicating that, oh, I'm going upward, right? And most of you might think, oh, this is also a break and retest trade kind of thing. It's still not it, right? I don't trade break and retest, right? So what do we do in this case? Um, Once you have this indication, you wait for the next phase, which is the correction or the retracement. And we all know that retracement is going to be something like this. Yeah, you still do not take a trade, even if you have an order block here, a breaker block, or you don't take a trade. What do? You wait for price to come out of this range. So for now, this would be your no trade zone. All right. You wait for price to come out. Once price is out of it, you take a trade. Example, something like this, something like this. You then take a trade here. And your first target to be here. But most times, I found out that even after the first target, it still goes on to continue the trend in the upside, especially giving you 1 to 5 or 6 risk reward, right? And this is it. You enter off here, and it has to be a body break, not a weak break. So I like to use the 4 hours for that. Right. And some people can use the 15 minutes and whatever works for you, you just have to back test it and see that it works. Okay. So back to business. So let's say I'm to analyze this US oil, right? And first, if we're starting off here, right, structure wise, we're in a downtrend. I'm just going to take this off. Let's do something like this. I just took out the drawing. So we know that we are in a downtrend, and presently, this is where we're working with here and here. So you come to the chart, I get asked, when you come to the chart, what do you do? All right, so we see that this is a downtrend because price is giving us lower lows and lower highs, which you can see here clearly. And lower lows, lower highs, lower lows. You can use the line to always, I think the line does a good job to just take out the wicks, right? So we're back to the candle. So what am I waiting for at this instance? I noticed that price has been breaking the lows, with weak, showing rejection, right? So I just wait for price to do its thing. We see that we have a break to the upside, right? A break of structure, an indication, or whatever you want to call it. And I do not get in. So this is your indication. 1 minute. So to bring out. So this yellow candle is your indication or your break of structure, right? The white one is the retracement back into the no trade zone, right? Let me just go on this time frame so that we can all see better into the no trade zone. And once price is there, you let price do its thing, right? And if you notice, price that are giving you on a lower time frame, price that are giving you lower lows, lower highs, lower lows, lower highs, lower lows. You need to wait for price to change from being bearish back to bullish before you can get in on the trade. And if you notice that happened here, right? So it changed from bearish back to bullish and broke with a candle outside the indication line, right? So if you're on the 4 hours, this is what we're going to see, right? So what do we do next? So you have your indication, you have your correction or retracement, then you have your continuation here. This candle giving you your continuation. Okay. So what do you do now? You get in on your long. Once the candle closes, you get in on your long. Some people go to the 1 hour to try and find structure. Okay, if this breaks here, the stop loss is usually below the candle most times, but you can be a little bit safety conscious by putting it below here, below structure, definitely. And what do? You let price play out. Okay. Okay, target. First target is here. And first target is your high. And your second target is when you see price start rejecting. It isn't so much, but then if you're using the 15 minutes, you can still use here. But I like to play safe. So let's see what happens. So first target has been hit actually. All right. If you notice on this time frame, price gave you higher high, higher low, right? And a higher high and a new higher low. So the safety thing or the best thing what you can do actually, not everybody does this, but you can do it. You can take a stop loss to entry to avoid getting stopped out, right? You can take your partials here. You can take 50 or 60, 70, 80% of your profit here and let the rest run, right? So the moment this low gets broken, I'm out. All right. So you see, I'm out here. So this would have given you 1 to 7.3 if you're here, 1.2 or 1.3 around here. So don't get me wrong, the possibility of this thing still going higher is here. But then, like I said, let's trade cautiously and try to eliminate what we can eliminate. Okay. So we have a new indication here. It's broke to the upside. So we only get in when price breaks with the body above here. Right? And this would be our low. And then I'm just gonna take this as your indication, this as your correction, correction, and a possible continuation when price comes out. So what happens? We only know that we are getting to a trade after price comes out of this with the body. So we have a break to the downside, right? Which means we have an indication to the downside. And you notice how, okay, I would have gotten into a buy, but there was nobody break. It saves you that fake out. Even up to the 15 minutes, there's nobody break out here. So, I mean, you just have to wait on your hands, sit and wait. Sit and wait. Because right now, price isn't giving you any clear direction. I mean, okay, it just did. It broke to the downside with the body. Remember, this was your low. This is your new indication because price didn't respect this one to the upside. A new break to the downside indication. I'm just going to pull this out and take it here. So this is your indication. It saves you a whole lot of drama, correction, and then your continuation. So where do I get it for a sale? This is your 4 hours, so you know that it's strong. Sorry, short. Yeah, stop loss above. Take profit. I like first take profit would be where you think there will be possible buyers. So we know that this price was pushed up from here, which means that buyers are resting here, right? La. So that's basically everything here to know, right? And after price took it out, you got in here. So let's see how many pips. But I have about 3,000 something, 1,300 something. However, I don't do all those calculations. But then we still have another indication here. We still have another indication, right? And you only get in when price breaks below indication, correction, right? Notice I didn't get in on this, right? Because it didn't get into the box. Like I like to see it. I like to see deeper retracement, okay? And I like to see price give me higher highs and higher lows. So we have indication and which is a lower low, lower high, higher low, higher high, higher low, higher high, higher low, higher high. And then price breaks below. This stop loss is going to be massive. Oh, we had a body break here. No, I'm not going to count that. Let me just use this to, for safety's sake. And maybe stop loss here, here, or here. However you want to work it out. Let's say the 1 hour if it gives us any structure to work with. Okay, this yellow candle. I'm just going to put it there and target here. First target actually. Bro, you cannot go wrong. I'm actually laughing because, bro, like you, it acts as if it doesn't work, but it works. It works like magic. It works like magic. Sure. So remember when I told you that we had buyers here pushing price upward. We still have buyers here pushing price upward. So let me try to look back in time, the next possible place that we have buyers, because we've taken out these buyers that were here. The next possible ideal place to run for are the buyers that are resting here, I think, right? So come on now. Come on. Come on. Come on. Come on. So let's say, oh, I'm going to hold a trade, lower low, lower high, lower low. And then once you see this, you're out of the trade, you're still making good money. You're still making good money. This is around 14,000 or 2,110. You're still making good money. I mean, I know you guys think, oh, he's probably doing it hindsight. I have been backtesting this thing for like a week and doing possible paper trading. So at least you should trust me when I say it works. It works. I mean, you're still gonna fail, right? But it gives you at least 90% win rate. 90%. All right. So what I'm gonna do is I'm just going to go to, and trust me, it works on a lot of pairs. It works on a lot of pairs. I'm just going to go to, let me go to Forex pair. I like to use it on I like to use it on pairs that has high volatility. Okay, so hmm, I'm going to do something like this. All right, go back in time. You see, definitely, I kind of know what's happening here. Put it on a straight line. So I just did a rough thing, and I'm gonna take it off here. All right. So what do we have here? Let's try to work. First, I see lower low, lower high, and an indication to the downside. Price comes will give me higher high, higher low, higher high, higher low, higher high, lower low, lower high. Is there a body break? I like to use the tip of the candle actually. And I look for a body break. Yeah, I got one here, I got two here. So which are we gonna go for? Go for short, going here. All right. One other thing you should know is that this should be traded during session. So since this is GBP USD, right? I think you can either go in during London session or New York session if you find an entry. So I'm going to turn on my London session too. So over here is not in session, while here is in session. So I'm going to take a shot from here, put the stop loss above, right? Because it's in session definitely. And then first target here, and that played out. Possible second target should be down here because we have buyers trying to push price up, right? But regardless, you're getting out your first money here. I know that grid is going to set in. Okay, so we see what I just said. So second target hit. Let's say, okay, he already saw that playing out and, it happens. So what is the original trend of this market? We do have that price is giving us higher high, higher low, higher high. So what's here? We have an indication. We know that anything that goes above this line should be a buy. If prices are giving us higher highs and higher lows, actually. Sorry, guys. So what happens? And here too, we still have an indication to the downside. I'm going to take off this because I think it makes it look very red. Still have an indication to the downside, but let's just stick with a major time frame. Right. Do we have a body break? Yes, we do. So we're taking a long from here, stop loss below, take profit. I mean, we could just be realistic. Oh, that was a loss. It happens. So why did I take a loss on this? Right? Because look, it's simple. Lower low, lower high, lower low. Price hasn't started giving you higher and higher lows. These were just internal structures, and we got into the trap for it, right? So that was a loss. But then, regardless, we still have our line marked up for when price starts doing this thing. Okay. So we see price come down, but it didn't break with the body, it broke with the week. So let's assume we are risking 10%. This is minus 10% of our account, right? So now we have a body to the break to the downside. We have a body break, which can signify an indication, and then we have price come back to the upside. So I think if I go to look on session, this might not be in session. To let me just see. Okay, it's actually in session. Yeah, it's not in session actually. So you see here, this is where I had a break to the upside. I'm just trying to tell you guys the reasons why this thing fails and why it works. So this is not doing in session. So getting in at this time is very, very wrong. This would be night actually. You understand? So it had every reason not to go your way. But then you see, I didn't know that. I just had to say that too. So we have an indication to the downside. We have price giving us higher, lower high, higher low, higher high, higher low. And then let's check. Are we in session? We're not in session right now. Let's see what happens when it's time for session. Yeah, we have a break to the downside. I keep going too long. We have a break to the downside. We have our stop loss above and first target here, second target, hula. Well, I think that's where we're going to end the video for today. So why did this fail actually? On the daily, these are just weeks. So it means the price didn't break out with the body. Those were just weeks. So we see rejections here, and then we wait for price to get really broken. See? So now that we see a break, let's then see what could happen when price comes back above. So we have a break and we have a short and stop loss above. First take profit here, and then let's see what happens. Gosh, I hate this pair. We have an indication, correction,